The most important thing is to zoom out. Use those long-term logarithmic charts. Filter down the noise, the excitement. Check yourself in how you feel emotionally and express yourself emotionally about price rises and price falls, because you're in this for the long haul. This is something, if it's going up 100x in market cap, and there's going to be 3 billion people adopting it by the end of the decade, you have to stay in the trade. You have to stay in the thing and keep an open mind. You know, you asked the question about, you know, what's going to happen? Is one of these layer ones going to beat Ethereum? The answer to everything is, I don't know.
Hey everyone, and welcome back to Wealthy Value. The US government has pushed a total of $9 trillion into the economy so far. With tax dollars so desperately needed, it's fair to assume the IRS will focus on cryptocurrency. But what if you could trade crypto tax-free? Here's how to do it in 30 seconds. Step 1. Open a crypto RIA account with our friends at iTrust Capital, the world's largest crypto RIA platform with over $3.5 billion in transactions and no monthly fees. Step 2. You can transfer your existing IRA, roll over your employer plan, or make a cash contribution through ACH transfer, bank wire, or check. Step 3. Start investing. Available assets include not just Bitcoin and Ethereum, but also Cardano, Chainlink, Polkadot, and all major cryptocurrencies, as well as physical gold and silver. All digital assets are held in offline cold storage with the leading institutional custodians, Curve and Coinbase Custody, which are both insured and backed by the largest venture capital firms in crypto. Use our link, itrust.capital/value, in the description below to get $100 in Bitcoin when you open and fund your account with iTrust Capital. And now, back to our video.
And everybody has to be intellectually honest with themselves, is you do not know. So if you keep an open mind, look at the network adoption effects, zoom out, and enjoy the biggest disruption that we have ever lived through in the financial markets and global business models, and embrace it. There's opportunity everywhere here. Just keep your eyes open. I referred before about the exponential growth in adoption. It's the fastest growth in history. We're currently at 150 million users. If we continue to extrapolate the growth rate, in fact, slow it down from 113 down to 83%, so knock it down by 20% or so, 30%, we get to 1 billion users by 2024. That's the nature of exponential trends, and 3.5 billion by the end of the decade. So if I then look and say, okay, if we're digitizing everything, and the digital asset space is essentially the digitization of value, that includes the securities markets, how big are they? So equities are about 250 trillion, 300 trillion, global real estate's 350 trillion, global bonds about 250 trillion. So if digital assets are truly the disruptive new asset class that basically absorbs all of those over time, is it so much to say that they could be worth 250 trillion? So that's 100x in market cap. So we will have never seen in human history an entire asset class grow in size by 100x in, I think, 10 years.
Okay, and when you look at the crypto market or even Bitcoin directly, what are the most important technical indicators for you to evaluate the market situation?
So I look at log charts to give me a sense of trend. It's very important not to use linear charts because it keeps doing this and going up and down. But log charts are perfect to understand the most important thing, which is Metcalfe's law, which is network adoption is how you price cryptocurrencies, much like how you price Facebook, Google, and others. So Metcalfe's law is basically the number of nodes on a network and the interconnection between them. So you're basically looking, how many people are using this? How many people are invested in it? How many people are using it? And what's the activity going on? That is the single most important thing. And you can estimate that, and that will give you trend. A nice logarithmic chart pretty much sums it up. Then after that, I will use on-chain analysis to try and see, okay, where are the tokens moving? Who's holding them? What is the growth in wallet addresses? And it's basically all the same thing. It's different ways of looking at the adoption. So those are the key things for me.
You said the markets will go down the path of greatest pain. I mean, does it mean that we are all masochists, or how we can explain that?
When I say greatest pain is The general, we're not talking about the general investors now who already have tokens. That would be the sell-off. But there's not a lot of pain from a sell-off because most of us are in it for the long run, interestingly. So you get a bit of leverage washout from Asian leverage traders, etc. The pain is the fact that every institution is allocating and wanting to allocate. Many of them have the mandate, but institutions tend to do things on a quarterly or annualized basis. So they're all waiting for their 2022 allocations from their investment committees. And, the worst thing for them is to see the market squeeze higher and higher in front of them. Also, a lot of hedge funds, for example, tend to, and the institutions tend to rebalance at the end of the year. Hedge funds will often close their portfolio because they start again in the new year with a new P&L. The hard thing for them is if the market goes up in the last 2 months of the year and they're not participating. It's that kind of pain. I think the pain is to the upside because everybody is short the call option, as I say. They haven't bought enough of it and they know it, but they need to get round to it. So more pain is higher markets.
The big question here, I think, in the audience too is when do we see the 100K Bitcoin in US dollars?
I think we'll see that. I think by end of year.
This year?
This year.
Wow. Okay, we'll off. And then I can continue with Ethereum when we are right at the point.
Yeah, I mean, I think Ethereum goes over 10,000 this year. So it's been a bit slow where it currently is, same with Bitcoin. But I still think that there might be some tax-based selling in the US and other bits and pieces, but I don't see a reason that it'll be wrong. And if it is wrong, it probably happens in Jan, Feb, March anyway. So it's like, does it happen in this last month or does it get pushed out a couple of months? Either way, it doesn't really matter because the year end doesn't matter to any of us, but that's the point. Although it matters to me because I own some Ethereum call options that expire at year end, so I needed to go.
Well, and what do you think about that Ethereum moves to staking? What's the influence maybe on the price too? Can you give us your take on it?
I think Ethereum ecosystem is a faster growing, deeper, richer ecosystem than Bitcoin is. So Ethereum is a very important part of this whole ecosystem. The move towards ETH 2.0 is a huge step in the right direction of the ability to stake and get yield. So it's creating a money market and a yield curve around Ethereum that doesn't involve DeFi. That's super interesting. And it'll become quite a deflationary asset. So what we're going to see is probably a lot of people staking, which we're seeing, all of these coins coming off exchanges, being staked, locked up in DeFi, locked up in NFTs, locked up elsewhere. And that means there's very little supply. There's about 11% of all Ethereum is available on exchanges to buy. You put an institutional demand in the middle of that and there's not enough Ethereum. So the probability is the price rises all the way into ETH 2.0, whenever that is, somewhere between March and June. And then we've got this unique situation where everybody who's staked is still locked in for a period of time, but the rest of us know they're all going to be sellers after it because they want to release some of their capital. So the market will front run that because the market likes pain. So if you're locked in your DeFi contract, in your staking contract, the market will front run your selling and you'll be selling at lower prices. But from what level? That's the question. And my guess is that level is more likely to be 20,000 than 4,500.